All right, welcome everybody back to another fun episode of Proof of Vision. Happy Veterans Day to everybody out there that has served. We appreciate you. Today I had on MacLane. He's the CEO of Threshold Network, Threshold Labs technically, and he's one of the founders of Threshold Network. But we had a really great conversation. If you haven't heard of tBTC, which is Threshold BTC, they're essentially a competitor with Coinbase BTC and Wrapped BTC. But I would say that they are a more like DeFi native version, of Wrapped Bitcoin. And so they really focus a lot on enabling users to earn yield, on your Wrapped Bitcoin through Threshold, which in my opinion is going to be the strategy that wins long term, right? So yeah, we get into kind of what has fueled their growth in the last year. They went from like 50 million up to 650 million in the course of a year, which is a very very healthy growth, especially in this market. So we touch on that. They also came out with a big upgrade today that makes it a lot more seamless to mint and redeem, from Threshold. So go check that out, obviously. We get into that a little bit in the episode and then kind of set the stage for the future on kind of where they're going with the product and how they're going to try to attract these institutions to Threshold ultimately for their Bitcoin. So yeah, it was a great episode. Really appreciate his time. Hopefully you guys enjoy it as well. And if you do, obviously hit the like and subscribe button. And yeah, we'll see you on the next episode of Proof of Vision. Take care, guys. All right, welcome everybody back to another episode of Proof of Vision, live on a beautiful Tuesday here. It's Veterans Day, but here we are plugging away, grinding. We've got MacLane. He's the CEO of Threshold Labs. How are you doing, sir?
Hey, Kirk. I'm doing well. Thanks for having me.
Absolutely. Excited to dive into things. I think this topic, just to give viewers my thoughts really quick here, this is one of my favorite topics. I think that there is obviously a severe need, in especially the Bitcoin space for a trust minimized, decentralized, whatever you want to call it, version of Bitcoin, right? That you can use on various networks and obviously turn it into a financial product that can do other things other than just sit in your wallet, right? So really excited to kind of hear, what you guys are building, what's coming up for you guys as well, and kind of get your thoughts on some of the the happenings here in the space. But before we do that, why don't we dive into your background a little bit? Let's find out how you got into crypto, what drew you to crypto, and then ultimately what led to wanting to build Threshold.
Yeah, absolutely. So I got into crypto, I guess over 10 years now at this point. Had moved out to San Francisco and was working out of a place called Hacker Dojo in the South Bay, which is like a makerspace, and just sort of stumbled into randomly a meetup that Vitalik was essentially on, like the ETH ICO roadshow, and happened to sit in on that and just found it very fascinating. Kind of fell down the rabbit hole. Ended up going to another meetup, SF Bitcoin Devs User Group, which at the time was like this sort of motley crew of, I think it was 5 of us. It was me, one of the early contributors to Cosmos and Tendermint, one of the co-founders of what ended up becoming Dfinity and ICP, and then another guy named Michael Egorov, who I ended up collaborating with. He's now the founder of Curve and Yield Basis, but together we ended up starting New Cipher, which was our sort of first real foray into the crypto world. And New Cipher, over a long period of time, ultimately ended up becoming a Threshold network, which is what we're working on today. So have been around for quite a long time, have seen sort of a lot of crazy cycles and just the evolution of the space from this sort of weird sort of niche interest to what it is today, which is, sort of becoming sort of this much more mainstream, institutionalized form of finance, at least on the Bitcoin side.
Yeah, for sure. And I think you hit on a key word. There's, institutionalized, or, kind of the industry is definitely trending, more towards that. And I think everybody's trying to position their product for like the eventual inflows, from those institutions. Um, but before we get into like your positioning on that, let's talk about threshold for a minute, just at the base layer, so the listeners can get a good idea. Um, Describe what threshold is, and maybe compare it to like what some of these custodial solutions are, and what the problem threshold actually solves there, for Bitcoin.
Yeah, so Threshold Network is the home of tBTC, and tBTC is essentially a form of wrapped Bitcoin that you can use in DeFi. So you can deploy it on Ethereum, on Sui, on Solana, on Starknet, and very soon on essentially any relevant ecosystem with a major DeFi uh, ecosystem and community. And what differentiates it from other forms of wrapped Bitcoin is most forms of wrapped Bitcoin are custodied by a centralized custodian that in an ideal case is a regulated qualified custodian. In some cases it's not. But generally the way that those work is you take your Bitcoin, you send it to that custodian, they hold on to it for you, and they give you a receipt token or an IOU token that represents that Bitcoin. You can take that IOU token and you can use it in DeFi. It's a very similar idea, essentially the same idea for tBTC and for Threshold, except the main difference is there's no single centralized custodian that's holding onto that Bitcoin. Instead, it is essentially a federation of all of the Threshold signers and Threshold network node operators that are collectively custodying that Bitcoin. So no one single operator can move that Bitcoin, without your permission. They can't, go bankrupt, and that Bitcoin becomes part of sort of the bankruptcy court proceedings. They can't steal that Bitcoin unless all of them essentially collude. So you have a much smaller trust surface. You're spreading that trust across many different independent entities instead of putting all of your eggs or all of your Bitcoin into one metaphorical basket. And the other major important piece is it's permissionless. So generally, if you're using WBTC, for example, you have to, or using cbBTC, you have to create an account with Coinbase or whoever is the sort of issuer of that wrapped token. You have to do KYC. You have to basically go through this whole rigmarole of onboarding. Whereas with tBTC, all you have to do is take your Bitcoin, go to the dashboard, deposit your Bitcoin, interact with smart contracts, and you have tBTC. And the reverse is true. If you want to redeem it back for native Bitcoin, you just go to the dashboard, interact with the smart contracts, burn your tBTC, and get back out native Bitcoin. So permissionless, decentralized, and trust minimized is sort of the major sort of differentiation for tBTC against other forms of wrapped Bitcoin.
Gotcha, makes sense. My question for you, when you're originally building Threshold, like what drew you to wanting to build this? Like you just mentioned, like the qualities kind of highlighted, but like was there like a particular event, that kind of like convinced you, right, that this needs to be built? This custodial solution has its drawbacks. It's dangerous, obviously, for anybody that hasn't been in the space a while, but it sounds like a lot of these custodians that the Bitcoin's usually housed with, right? Sometimes they're the largest financial institutions in the world. Like they are very large, but at the same time, there is a non-zero chance, right, that something does happen. They go bankrupt, or something else is compromised that ultimately costs your assets, right? So, like, what was it for you? Was there a particular event? What kind of like inspired you guys to build it?
Yeah, I mean, so I think like the original impetus was, we were Bitcoiners. That's how we sort of got into the space in general, and we very much sort of wanted to reflect kind of this ethos of Bitcoin into DeFi and into, if there's demand for deploying Bitcoin into DeFi through these various wrapped custodial solutions, either to earn yield or to borrow against that Bitcoin without selling it and triggering a tax event. Ideally, like, the most pure form of how to do that would match as closely as possible the trust assumptions to Bitcoin itself. And historically, like that's very much not been the case. You are essentially handing over your Bitcoin to some counterparty. And I think like you made a good point. Like today, in general, those counterparties are a lot more solid than maybe they have historically been. But if you look back over the last 5 or so years of the track record of a lot of these custodial wrapped Bitcoin solutions, it's been absolutely terrible. So there's been multiple high profile cases of where like something happened to the underlying collateral and the token got completely rugged. So like the first was RenBTC, that got caught up in the whole FTX Alameda collapse, and all that Bitcoin got sort of sucked into their bankruptcy proceedings. So if you held that token, basically you got wiped out. Multi-BTC was another similar case where it's unclear what actually happened to the underlying collateral, but either like the CCP seized it or just some, local corrupt police department in China seized the underlying collateral. That got wiped out. HBTC, I think got hacked and they lost the collateral. So it's just been like this repeated pattern of some new centralized wrapper comes out, promises really high yield, people pile into it, it gets rugged, they lose their Bitcoin. And I think that is, every time that happens, it sets the space back significantly. And so what we want to do with tBTC is just provide a really solid, bulletproof way to deploy your Bitcoin, know that the security is really rock solid, and not have to worry about something happening to that underlying collateral, which is like obviously catastrophic whenever that happens. And so we're very focused on just providing the most trust minimized way to do that, and the most trust minimized rails to deploy your Bitcoin wherever you want to deploy it. We're agnostic as to whether you use it on ETH or SUI or Solana or elsewhere. We just want to give you the rails that are the most secure and trust minimized rails to do that. So that you can be as confident as possible that you're not going to get that collateral rugged. Ultimately, like the most secure thing to do with your Bitcoin is to hold it as native Bitcoin on the Bitcoin blockchain, never touch it, just leave it there forever. But if you're going to do something with it, we want to provide the most secure rails to do so.
Yeah, it makes sense. So I know you guys have a big upgrade coming out, on the roadmap here. What is that doing for your threshold? Like what are the strengths that it's adding to the model? And how does this change like the product positioning maybe for like the institutional flows that we were kind of talking about at the beginning? Let's dive into that a little bit.
Yeah, so there's a couple aspects to this. I think one of the things that everyone in the space is noticing is that Bitcoin and crypto is becoming much more mainstream into sort of traditional finance. There's kind of like this merger of DeFi and mainstream TradFi. And increasingly the largest deployers of capital into DeFi. And certainly like holders of Bitcoin itself, although a lot of that is yet to be deployed into DeFi, are institutional. So you have the digital asset treasuries, you have, traditional funds that are increasingly holding Bitcoin on their balance sheet. And obviously, like we want to obviously cater specifically to those people, in addition to our current user base of individuals and degens and people who are DeFi enthusiasts who have historically been very active in DeFi. I think increasingly the inflows will be coming from institutions, and so there's a couple things that a couple ways those requirements for those types of users look different from the typical DeFi user. Some of it is overlapping, some of it's very similar. Like you want to be able to go back and forth permissionlessly and seamlessly and quickly from your particular DeFi ecosystem of choice back and forth with native Bitcoin. You want to be able to get the best yield, the best risk-adjusted returns. You want to be able to borrow. So a lot of the behavior looks very similar. But there's also differences. Like we're going to be enabling a way to bring your own custody pretty soon for institutions that have either compliance or tax considerations where they don't want to use the current bridge because either they don't quite understand it or they don't quite trust sort of the honest majority model, or they consider it a potential tax event to use that bridge, and they want to be sure that minting tBTC does not trigger some sort of capital gain. So that's a major piece. But the upgrade today is sort of making the minting dashboard and redeeming dashboard much simpler, much more intuitive, and then also adding direct redemptions from several of the supported chains. So historically, you've had to, if you have tBTC and you're using it on Base or Arbitrum, you have to bridge back to ETH-L1 in order to redeem back to native Bitcoin. With the upgrade today, you can directly redeem from those two ecosystems and all the other ecosystems very soon. So basically, a lot of sort of UX improvements and setting the stage for this bring your own custody model very soon as well.
This episode is brought to you by Pendle. Pendle is a leading protocol in the DeFi yield sector, operating as a permissionless yield trading protocol, facilitating the tokenization and splitting of any yield-bearing assets in DeFi. This allows users to speculate on future yield or earn a fixed rate on their assets. Learn more at pendle.finance. Gotcha. Makes sense. I want to double click on the bring your own custody model that you guys are talking about, this feature, right? That you're kind of setting the stage for. So explain that, because like at the beginning, we were talking about the benefits of threshold, right? Which is basically, nobody's holding your Bitcoin, no individual, entity is holding your Bitcoin. Now, for the institutions that want to bring their own custodian, how do those two worlds marry, in the middle there? Like, how does that actually work in practice? And obviously for that institution, at that point, they don't care, right? Like they're like, yeah, no, I want my custodian, right? Legally, I need this custodian. So how does that work, like with you guys? Why doesn't that custodian just create their own wrapper or go through Coinbase or go through, another one of these, one of these entities that are kind of already set up in this manner versus
Yep.
like something threshold?
Yeah, so absolutely. I mean, and on like the technical and architectural side of how this works, we'll have a lot more to share soon. But the part of your question about like why go through tBTC to do this, I think the reason is most of the centralized wrappers actually aren't set up to do this. So if you use WBTC or cbBTC, you're actually commingling your funds with other users' funds. So there's not a clear segregation. Like if you deposit Bitcoin into cbBTC, you go and you do DeFi stuff, and then later on you withdraw back out to native Bitcoin. You're actually not getting the same Bitcoin back out. Those are different UTXOs. Like there's not a clear segregation between different depositors' funds. So like that's one reason. Like in the tBTC model where you bring your own custody, you put Bitcoin in, you get the exact same Bitcoin back out. So very indisputably, there's no disposal event. It essentially looks very similar to like a loan against that Bitcoin. So you know for sure that you're, from a tax perspective, you're not triggering any potential capital gain if you're in a jurisdiction where that might be the case. And also from a compliance perspective, your UTXOs and your Bitcoin is not getting commingled with other people's. And then the other piece is tBTC has a lot of DeFi integrations and a lot of ways to earn yield on ETH-L1. It's essentially on every blue chip DeFi protocol. Whereas if you were to spin up your own wrapper and to try to do this, you basically had to replicate this entire ecosystem of integrations, which there's no point to do this. You just use tBTC, you bring your own Bitcoin, you bring your own custody, you deploy that into DeFi. You can earn yield on, LPing on Uniswap curve yield basis. You can borrow against it on Aave. Basically everything is there and ready to go. So there's not really any benefit to try to like replicate this yourself and build up your own wrapper from scratch. So those are, I think, the major considerations why an institution might want to do this. We build the rails, we integrate with other ecosystems beyond even ETH-L1, and we just sort of surface these opportunities for you to choose from.
Gotcha. Makes sense. And what you just said there kind of like puts the entire puzzle together, doesn't it? Because you look at DeFi Llama. I was looking at DeFi Llama before this, right? And I think it's like January of 2024, 55 million, all the way up to 630 million ish today, right? In tBTC. And a lot of that obviously is on the back of like these DeFi integrations, right? People being able to go to Aave and borrow against tBTC or
Yep.
LP on Curve, right? And earn income, on their Bitcoin, has been a huge driver for you guys to kind of fuel this growth. So you've been like setting the stage, I guess, right, for this last, year and a half, couple years, right, where you've built out kind of like the on-chain part of it, right? And now you can go out and kind of enter the next phase of growth, which is like, okay, let's go sell all of these institutions, these corporations, these DATs on how they can just seamlessly use tBTC with their legal setups, right, and still get the benefits of kind of like the yield infrastructure you've built on chain, right? So it makes sense, and from like a product positioning standpoint and kind of like a go to market strategy, it's a longer strategy, right? But it kind of all comes full circle like that, right? So I think it makes good sense. Um, and again, I think the main question I had coming into this chat was, okay, my thesis on institutions is that they are going to want to choose their own custodian, right? And many of them are going to prefer to actually have like a centralized custodian, versus like a decentralized setup. There's a lot of reasons for that. Mainly, education's one of them. There's a big education hurdle to get over to explain, decentralization and how it works and how it's, incredibly neutral and all that. And then, there's legal reasons, and it's just kind of like a comfortability, I think, where a lot of them want to be able to like interact with their custodian, call their custodian if needed or whatever, take them to court if they need to take them to court. And so I think it makes a lot of sense, right? Based on like where the industry is going, for this kind of thing. Which is great to see. It's great to see kind of this outside the box thinking, right? Where I think you run into a lot of like decentralized platforms, and it's all about decentralization, right? And really, it's the first time I've heard like a marrying of those two worlds. So that's kind of how I think about it. I don't know if you guys have the same thesis. Obviously, I think you do, but that's how I've been thinking about it, at least.
Yeah, I mean, I think that's right. I mean, I think ultimately, like, we want to provide the most secure rails to deploy your Bitcoin into DeFi. And whether that is security through decentralization and trust minimization on that front and cryptography, or that's security through the comfort of bringing your own custodian, and having the legal backing for that, I think we're agnostic to. We just want we want to meet people where they are. Some people will prefer to bring their own custody. They'll prefer to use their existing custodian. Some people will prefer to use the permissionless bridge and the permissionless model. And I think giving people the option and meeting them where they are, both from the custody perspective, but also from not being opinionated on where and how they deploy that tBTC once they have it, and just providing them the full menu of options to choose from between various ecosystems and also the different sort of blue chip protocols on each of those ecosystems is our focus and priority.
Makes sense. So kind of on this topic too, like Wrap Bitcoin obviously has been around for a while. Coinbase Wrap Bitcoin is probably like the second one comes to mind. I mean, we're talking about like billions of dollars, right? And those two assets. And you guys are on this like growth trajectory, right? Kind of straight up. What do you think it takes for Threshold to like take a larger chunk of market share away from those types of setups, or is that not your focus? I mean, obviously the TAM is very big for Bitcoin that's not deployed onto the blockchain, but like what do you think the differentiating factors are going to be that like take you further out into contention with those really those two dominant entities historically?
Yeah, so there's a couple things. I think the bring your own custody piece is a major part of it, which neither of these wrappers offer. So you're depositing your Bitcoin is commingled with others, probably a tax event. You're not getting the same Bitcoin out as you put in. The other piece is just making sure that we are integrated with all the protocols that people want to use, and being able to quickly integrate. Let's say when a new chain launches, and they're going to have a lot of yield opportunities on this chain that are differentiated from other chains or older chains that maybe don't have quite as high of yielding opportunities, like making sure that tBTC users have immediate and quick access to that, and making it seamless. So the footprint for cbBTC and WBTC in terms of new chains is actually quite small, like very heavy on ETH. For cbBTC, obviously a lot of it is on base, which is their sort of their home field, their backyard. But they're not going to be as quick to expand to a new chain, particularly if that chain happens to be competitive with base. So we see a lot of phenomena like with WBTC, where obviously huge amounts of TVL, very sticky because a lot of it is sort of just parked in lending protocols that people have borrowed stables against. They've sort of just forgotten about it. They don't have to touch that often. They just manage their position and make sure that they're not going to get liquidated. But if you actually look, like there's not really new mints happening into WBTC. It's basically just like a slow bleed out because there's not really anything new to do with WBTC. It's sort of legacy DeFi protocols where people, it was the first mover, so people put a lot of stuff there, but nothing new is really happening with WBTC. Whereas with tBTC, you're going to have access to the latest and greatest sort of new chains and ecosystems and protocols. You're going to be able to bring your own custody, which you're not going to be able to do with some of the alternatives.
Yeah, makes sense. Makes sense. And we talked about bring your own custody again, but another question that occurred to me is kind of like on the scalability part of that concept, right? So when you say like bring your own custodian, there's a lot that goes into probably like allowing that to be set up though, right? Like it's not as easy as just bring your custodian and then you're onboarded tomorrow. Like how long does it actually take for you guys to be able to like onboard these custodians and get like your legal and technical setup to the point where like they can actually make that happen? Is that I'm assuming that's a several month process or like, can you give us any color on that? Because that's the only thing I would worry about, right? Is like, there's probably only a limited number of these custodians, right, that you guys would actually accept, and kind of view as like trustworthy. But there's a lot of financial institutions out there that are going to have different custodians of different shapes and sizes. So like, how do you guys scale that part of it?
Yeah, and so I think we'll have more to share on like a lot of the specifics, but at a high level, actually, the integration is, from a technical perspective, pretty simple. The custodian needs to be able to do a smart contract call to mint and redeem tBTC and or into Bitcoin. So both ways. They also need to provide proof of reserves so that the network can validate and be sure that tBTC is collateralized sufficiently by real Bitcoin. But the main sort of bottleneck would just be, does the DAO, does the network approve of onboarding a new qualified custodian? And that is a combination of like due diligence, reputation, deciding like what is an appropriate mint cap to assign to a particular custodian. That would be that governance process of onboarding and approving a custodian would probably be like the longest in terms of timeline, the longest part of the process.
Gotcha. No, it makes sense. It makes perfect sense. And it's an interesting tidbit you brought up about WBTC, about how there's not really a whole lot of new mints, whereas obviously for tBTC, especially in the last year, you've kind of seen this massive kind of first phase of your growth, right? What's the biggest focus for your team, in terms of like DeFi, right? Obviously you guys are kind of like the asset issuer, for lack of a better term. Is there a big focus for your BD team going out there and building products with some of these vault providers and some of these primitives that we're seeing kind of pop up? How does that look? Is that a big part of the business, or is that something that's kind of just come naturally from like protocols that are interested in building on tBTC?
Yeah, so there's a couple pieces. I think certainly like with this growth that we've seen in tBTC the last 12 months or so, there's been a lot of sort of organic integrations, new protocols launching, and they have tBTC as collateral from day one with minimal or no, need for us to be involved in that decision. And so like, I think yield basis is like a good example of a very exciting new protocol that supported tBTC from day one. And like you can deposit tBTC into yield basis, and it creates a volatile LP pair with CRV-USD that is, in theory, like it's obviously a very new protocol I'm excited about, but in theory, free from impermanent loss, right? And the yield, the organic trading yield on that is very strong. There's also the option to choose to receive sort of yield basis token emissions. So like, I think there's increasingly a lot of like new protocols that have tBTC from day one. We're focused on making sure that like if there is an exciting new protocol that tBTC users want to deploy into, that they have that option, that tBTC is collateral. So talking to the DeFi protocols themselves, but also the different ecosystems. So we most recently launched on Starknet and Sui. Starknet has a Bitcoin staking product. You can stake tBTC to help secure Starknet and earn staking emissions. That sort of more an ecosystem level conversation will be expanding to more ecosystems going forward as well. And then also just understanding from depositors and users of tBTC, like what are they looking to do? What are the protocols? What are the ecosystems they're most excited about? We're also very focused on, I think you mentioned like the vault products. Like some LPs and some depositors want to manage all the DeFi operations themselves. Others they just have a hurdle rate. They want to deposit their Bitcoin and they don't want to think about it. And they want to sort of delegate all of like the operational DeFi stuff to a vault manager or a vault curator who's going to implement some strategy and carry out that strategy and generate yield on their behalf. So I think that will be a major growth vector for tBTC as well, is just providing more and more of these one-click yield opportunities where there's some underlying strategy that's being implemented on behalf of depositors and making it super easy for them to ultimately, like, the goal is generate yield, right? If you subject to like the risk of a particular strategy, you don't necessarily care a lot how that yield is generated. As long as it's generated and it's an acceptable level of risk. And so obfuscating a lot of sort of the complexity under the hood and just giving people that easy option, I think is also a big focus for us.
Yeah, it makes sense, and really the Starknet integration is fascinating to me, and because again, taking it back to like cbBTC and WBTC, like I don't see them going out to these new networks and working something out like that, right? For a lot of reasons, where you can stake, this primitive and actually secure the network and then earn, income based off of that. Like that's going to be a big thing, obviously, moving into the future. That I see for you guys is like those level of integrations too, right? And then you can really start to stack yield, right? Because now you've got a yield bearing version of your primitive that you can go and plug into these financial applications as well, right? So really starting to kind of like kick off the money Legos for Bitcoin, I think is huge, and I love seeing you guys kind of take a big part of that, and take pride in that too, because you look at ETH, right, and ETH's got all these money Legos built on top of it now, right, and you're starting to see like the same thing for BTC. And I think that's going to be a huge capital unlock, for DeFi, because, everybody talks about like, this cycle, especially, right? There hasn't been a lot of like new inflows, like net new inflows. And I think one of the biggest places we're going to see new inflows is from Bitcoin holders being able to come on chain, borrow against their assets, and then go plug that capital into other things, right? And I think that's a huge unlock. So it's going to be great to see kind of Threshold expand, its presence as you guys move forward.
Yeah, I mean, I think that's right. I think you mentioned like there's not been like a lot of net new inflow into DeFi. The last year or so, at least on like the BTC Fi side, and that's why I think like our growth the last year is particularly exciting, because if you look at our competitors, basically they're either all flat or like significantly down. And so this increase that we've seen is not just sort of us riding sort of beta, but like capturing these inflows disproportionately, or even sort of taking market share from some of those people because of a lot of the reasons that I mentioned before. Just there's more yield opportunities. We're integrated into more interesting, newer protocols. And people, I think, are excited about that.
Absolutely. Well, I think it's been a great conversation, MacLane. Appreciate your time. Before we wrap up, though, is there any closing thoughts? Anything else on the roadmap that we haven't touched on? I know we talked about the upgrade a little bit. Anything that's got you excited, for Threshold or even in the market in general, that you've kind of got your eye on?
Yeah, I mean, I think for Threshold and tBTC, the new app just launched today, so it makes it a lot more intuitive to mint and redeem to and from like your ecosystem of choice. So if people have Bitcoin that they want to deploy into DeFi, you can go to app.threshold.network, easily deploy that to your ecosystem of choice. We're going to be on. We also have a nice sort of new way to explore and surface yield and borrow opportunities, whereas before it was a lot more scattered. So in one place you can like filter by ecosystem, by protocol type, and easily figure out where and how you might want to deploy that tBTC. I think going forward, just we're working on integrating additional new ecosystems, both for direct mint and direct redeem from these ecosystems. Vaults will be onboarding more and more vaults for these sort of easy one-click yield generation opportunities. And then obviously like the bring your own custody very soon will be another major unlock for us.
Looking forward to it. Can't wait to see it. Congrats on the growth so far. Really looking forward, at least from my seat over here. I'm really looking forward to the bring your own custodian type model that you guys are bringing in the future. I think that's going to be a big unlock. It'll be really interesting to see how that plays out. So, yeah, thanks for your time, MacLane. For anybody listening at home, obviously check the show notes. We'll link you out to where you can find Threshold Network. Keep an eye on Alia Research as well. We're going to have some reports coming out that'll kind of break this down for you and really help you understand what the opportunity here is for Threshold. But yeah, other than that, thanks for tuning in, everybody, and we'll see you on the next episode of Proof of Vision. Take care.
Thanks, Kirk.